The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the February 14th, terrific Thursday, Valentine's Day edition of the Money Masters. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential because, folks, you have an amazing potential within yourself. And when it comes to your human potential in trading these markets, it's all about taking advantage of all the tools that will increase your probability of success. And my mission is absolutely to help you achieve your success. So let's go get our money started, as well as our morning started with a quote from one of my favorite books, The Art of War, out here, and that is this: in the midst of chaos, there is also opportunity, and nothing, folks, could be more true than the markets that we trade. And the market, because this is organized chaos, we'll take a look at the patterns that we see out here in the marketplace. Our call number is 877-927-6648. Would love to hear from you. Give us a call if you'd like us to take a look at a stock chart or anything else. And let's start off by taking a look at the indexes here. Right now, the Dow is up about 20 points, trading out at 13,963. Composite trading at 31.87. That's down about 10 points. S&P off about 3, out at the 15.17 area. Russell 2000 is the strongest dog in the house here, trading out at 9.20, really unchanged for the most part. Google's up a quarter. Apple down 21 cents right now. Equinix is the leader in the clubhouse now. EQUIX up $12 and change. 12.18, up 5%. Heinz Company, of course, with the buyout of Berkshire Hathaway and 3G out there. That's up a nice $12 here. That's up nice 20% premium there. You got Constellation Beverages, STZ, up 35%. That has a nice move. We'll take a look at that stock chart. Bud, BUD, up 6%. J2 Global, JCOM, is the ticker symbol. They're up 13%. Angie's List having the biggest move, up 30% today. That is up $4, trading out at $17.76. Alta having is the worst performer, the laggard here. Down almost $12, down 11.5%. Weight Watchers not far behind it, off $10 and change. That's off 18%. Strayer Education now in the mix here, off 14%. That's down $9. CenturyLink, CTL off 20% this morning, off $8 and change. Whole Foods off $8 and change. Shire PLG, SHPG down 5% here. Stamps.com, STMP is a ticker symbol. They're off 15% this morning. So let's go take a look at the index. Let's start with the strength out here. Let's start with the Russell 2000. Now, the Russell 2000, I had noticed yesterday as I was going through charts here, the Russell 2000, because I was struggling to figure out where the Russell 2000 might be headed to, and realized on a longer-term basis what the Russell was doing was completing a 1.618 butterfly pattern. Now, that butterfly pattern, folks, takes us back to the swing point high, back to the days of March 27, 2000, March 27, 2012. The high there was 847.92. What's the market do? Goes from that high inside the Russell 2000 all the way down to the low on June 4th, 2012. That low, 729.75. If you took the difference between those 2 points, multiplied it times 1.618, added it to that June 4th low at 729.75, that would take you up to a price point of 920.95. 920.95. What did the Russell do yesterday? Got up to a price point of 921.29 out there. Today, right now, trading out at 920.76. So the Russell 2000 now has actually completed a pattern. You know, as we take a look at the S&P charts, the Dow charts, we see all these expansion patterns that are out there. We see the markets traveling into the overbought condition. These are typically reversal patterns, but they're not a reversal pattern until you see some type of signal, some type of candle signal that the market is getting ready to pull back, move sideways, whatever it might decide to do. In the case of the Russell 2000, the parameters for the day are pretty easy here. Yeah, the Russell 2000 open up the trading session at 920.55. The close yesterday was 920.58. If the Russell 2000 today were to close below 918.13, that would give you your first bearish signal out there. So you do have a completed pattern out here in the Russell. It was different than what we were looking at yesterday as I was taking a look at A to B equals CD patterns. I was just simply coming off of the November 16th low. That would have been my A point here. That would have been 763.55. The B point being made on December 21st or December 20th out there, 852.49. Yeah, 852.49 on the 21st. Your C point, just a slight pullback here. And so you got the 1-to-1 A to B equals CD, but that's with inside the C to D leg that is out here. So you do have a completed pattern. Really, you've got two completed patterns at least inside the Russell 2000 out there. And that was one of the things that concerned me because it looked like to me the Russell might want to run into that 940-ish level out here. It can still do that for sure, but you now have at least a completed pattern. I did not like that A to B equals CD pattern. I don't have a problem with a A to B equals CD pattern in the C to D leg of a move, of a larger move. That would make sense to me. So we do have the patterns out here in the Russell. Now what you're waiting for is to see if the bulls, or the bears, I should say, are going to come out of hibernation. Let's go take a look at the other index charts out here. Let's take a look at the S&P 500. S&P 500 right now trying to take on that support level, which is the old resistance line. That resistance line really being set up by the bearish engulfing candle from February the 4th out there. That was after the market moved up nicely, moved up, made a high at 1514.41 on February 1st. And then you had the bears step in and say, hey, maybe not just yet here. And then, of course, you had the market close over that last week on Thursday or Friday, I believe it was, on February the 8th, as it closed at 1517.93. So the line in the sand that is being tested here today, which is important, the number is 1514.41. We've already had one test of that level. That first test came in here on the trading session of February 11th out there as the market got down to 1513.61, closed back above it. Today, so far, the low that has been put in has been 1514.02, 1514.02 versus 1514.41. So now this could be, so from the bullish standpoint, what you would like to see here is you would like to be able to see this stay above 1514.41. Then what you're ideally looking for, bullish or bearish, what you're looking for, because you want to be able to read the message of the markets out here. What you want to do, folks, you want to pay attention to that area, because a third test of an old area, which really, from a resistance standpoint, to set up the bearish engulfing candle that identified resistance, but until it gets tested 3 or more times out there, it's kind of like, it's a resistance point, but it's not a real tested one until you've had 3 tests. So now, today makes the second test. Now, get back below. You closed below 1514.41, and what you had was a false break topside. That is the S&P cash index out here. Let's go take a look at the Dow. Let's go see what the Dow is doing. We know the Dow is struggling to hold that 14,000 level. And as we take a look at it right now, you've got the Dow trading out at 13,966. We see the beautiful patterns, absolutely beautiful patterns out here. The 3 drive to a top, the 1.272 butterfly. And in the case of the Dow, you know, it has the February 1st high is 14,1978, trading below it. You only had the Dow get above it for one trading session. That happened to be the trading session of February 12th out there. So the Dow is saying, it's kind of ready here for a pullback. Of course, we're seeing some pretty decent resilience in the marketplace, but we'll go take a look and investigate further. But the number here for the Dow, really, quite frankly, the Dow is pretty simple. If it closes below 13,971.24 and it's at 13,969, the Dow would be signaling, giving us at least a bearish reversal signal here. So the Dow will be pretty easy today to be able to make, if it finishes in the red, would be easily able to make a reversal signal. So we've done the S&P, we've done the Dow, we did the Russell 2000. Let's go take a look at the NDX 100, see what that is doing in the NDX here. What's Apple doing? Not a lot. It's up 40 cents out here. As we take a look at the NDX, it has completed a Gartley sell pattern. There's another Gartley sell. There's really 2 ranges, 2 areas for a Gartley sell pattern out here. One is in that 2780, the high that came in on February 8th, made a nice 1.618 of an expansion of a 1.618 expansion of the B to C move. That was December the 19th high down to the low that was put on December 31st. That area, as you can see, holding as a resistance level. You could, if the market were to move up, I would assume that it would be the NDX and the S&P that would push the market higher. You would see the NDX most likely move up into the 2802 level. That would set up a completed A to B equals CD up and a 0.786 retracement. That is on the NDX. Let's go peek in on the composite. Yesterday it was flirting with its highs out there, and it closed back below it. And did it with lighter volume out here. The high that it was getting over was September the 21st. That level was 31.96.93. Yesterday got up to a high of 32.05 and closed at 31.96.88, just slightly below that level. So that has made a 100% move of a move. It has made a 1-to-1 A to B equals CD up. That price projection was 32.04.86. It got to 32.05.52. How does that work? That's a beautiful thing out there. 877-927-6648. That takes care of the indexes out here. Let's take a peek around the world, see what it is we've got going on around the world here. The DAX in Germany off 71 points right now. Looks like the DAX here is getting ready to form an A to B equals CD down. That looks like to me would take it down in the 73.13 level. What we have at the 73.13 level is the 0.618 retracement off of its move from November 16th's low, which was 69.50 all the way up to the high. That was put in on January 28th out at 78.71 out there. If we take a look at this B to C retracement that the DAX made, it looks like it was a beautiful 0.618 retracement, and most certainly it was. The 0.618 level, 77.44 and a penny. Yesterday's high actually got up to 77.37.41. Off by just under $4. You got to love that on an instrument that is priced out at the 7,000 level. So you've had the 0.618 bounce inside the DAX. That sets up your 1-to-1 A to B equals CD. That would take you to 74.0297. But as I say, I suspect 73.11 is really what the DAX is after out there. Let's go peek in on the UK, on the FTSE out there, and see what the FTSE is doing. The FTSE here, it looked like to me, and maybe it still wants to do this here, is complete its butterfly pattern. This butterfly pattern, this is a beauty, folks, because the wingspan on this has got all of the Fibonacci numbers that you'd like to see here. You'd have a 1.618 expansion off of the swing point high that takes you back to March 14, 2012. This actually looks more like the Russell 2000 than anything else out there. It looks like really the exact same pattern, only it's got better and more beautiful Fibonacci numbers. That's your 1.618 expansion off of the March high down to the lows that were put in May of 2012. Then you've got a 2.618 expansion. This is your B to C swing point expansion. This is off of the B point, which was the high of September 14th, 59.32, down to your C point on November 16th, 2.618, 1.618, all coming together to about 64.53. Average trade at 63.34 right now. 877-927-6648. Dow's off 12. S&P's off about 2. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow down 18 points right now, and another chart to really be paying attention to is the king, is the U.S. dollar index, because it is moving up into an area of prior resistance. So to the extent that we've seen any retracement in the markets, which has been pretty much nil, and to the extent that we're taking a look at commodities, because they are priced in dollars, so we're taking a look at gold and silver, and as we took a look at the S&P 500, how that had moved over a bearish engulfing candle, which then said, okay, that was should have been a resistance level. Once you're up above resistance, that should become support. So we know we are seeing at least 2 days right now of test of that area. If we peek in on the U.S. dollar index, what we can see here on the daily chart, you can see that the U.S. dollar index intraday so far has made a high of $80.71. Now, that 80.71 just slightly underneath the area that has acted as a resistance level. That's going back to the gap down of November the 23rd out there. So you had the U.S. dollar index gap down. The high of that session was 80.76. So you can almost say that the intraday high today is close enough to that level. Maybe it pushes a little bit higher, but both bullish and bearish because from a commodity standpoint with regard to just simply if the U.S. dollar index gets over this area, just like the S&P did, you see you had a bearish engulfing candle right here on February 12th, and the high there was 80.59. You're up over that level. But you've got the bears here. You've got a bearish engulfing candle on January 10th as well. That's 80.79. So what it really sets up is a close above the horizontal line right here would be a change in polarity is one way to take a look at it. A change in the trend, and old resistance would now become new support. One way to really, if you were going to get really articulate about this, you would have to say that the second level of resistance really for the U.S. dollar index to get over to really see a total change in polarity. I'll put this one in red, is going to be the bottom of the gap down, which is the November 21st candle. That's that 80.94 level. And you can see that the shadows, which are really the extremes, it's the emotion of any kind of candle session, that is the area that also was tested on December the 7th, as well as the January 4th level. So in order for the U.S. dollar index to totally flip, not flip out, but flip around with regard to support and resistance out there, it really would need to close above $80.94. But this is a chart that each of us want to be paying attention to. Let's go out to Johnson City, Tennessee, to our man Tim. Tim, thanks for calling. Thanks for holding. How are you this morning?
Hey, doing good, Steve.
Excellent.
I'm the one that called a few days ago looking at that Apple Head and Shoulders on a weekly.
Yes, using the 10 and 30-week EMA, simple moving averages.
Yeah, simple move, yeah. But I want you to look, I just want you to see this and maybe and give me some advice on it, or maybe you think it's legit. But if you pull up a monthly candlestick S&P 500, I won't make you put any moving averages in. But
well, I can do it. That's okay. No, look, this is the home game. You got me, and so so that's no problem. So we're going to take a look at the S&P 500, and we're going to take a look at a monthly chart out here. Actually, let me just kind of pull up my S&P 500 monthly chart. Okay, go right ahead. Now I've got the 50-day and the 200-day exponential moving averages in here, but what did you want to? So I've got that up on the screen here.
I want you to draw a trend line from the bottom of the crash in 2011, with a European situation. And if you take a line and just draw a diagonal upward line to the bottom of the January candle of this year.
Okay.
Start with that. Just draw that line.
Yeah,
okay. Now take the top of the crash in 2011 and draw a trend line to the top of the January candle.
Okay, hold on a second here. So we're gonna let me just put this in black. It'll be a little bit easier for everybody to follow along. Or maybe I probably should put it in blue here. So let's go ahead and put this in blue. Now so you want me to go ahead? So I've got the bottom trend.
Yeah, the bottom.
And you want me to go ahead? You want me to go ahead and use what?
Well, see how the bottom.
The April 30th.
The very bottom of the crash where it bottomed in 2011.
Okay, so the October lows. Okay.
Yeah, you can see where it sort of bounces. It's like an upward trending line.
Yeah.
It's reached and then hit it and then gone back up.
Okay.
But now if you take the top of the highs of 2011 before that crash.
Yes.
And draw another trend line hitting the peaks to where you're ending at the top of the monthly candle of January.
The monthly candle January. Okay, Tim, stick with us. Hopefully, I'm drawing these patterns here for you. But we're going to go back to Johnson City, Tennessee. You too can get in on the action, folks. 877-927-6648. And happy Valentine's Day to all of you out there. We'll be right back, folks.
Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow off 6 points right now. S&P almost flat down 90 cents. And we're going to go back out to Tim in Johnson City, Tennessee. He's having me draw some lines here. And, folks, I'm doing the best that I can. The problem, and Tim doesn't realize this, is that early on in my life, back in the kindergarten time frame, they removed me from art class because I failed at being able to actually draw a stick man. So they sent me to math science lab, and that's where I kind of hung out. So my apologies if I'm not following your instruction very well. It goes back to those early days out there. But I do have a.
Well, actually, I'm not looking at the screen. Otherwise, I'd be able to help you. But if the bottom line, and it's going to be an upward sloping trend line.
Yeah.
The bottom should hit the. It should hit the lows of 2011 after that crash. It should hit the lows of 2012 after sort of that mini crash. Then it should hit the low of the January.
But you're coming off. Where's your line starting? Is it starting at the lows of 2011?
Yeah, after that crash, right where we hit the bottom.
Okay.
So it's just going to be you can see sort of where it bounced, and then it sort of bounced in January. Now the upper line. What I'm trying to show you is a wedge that is narrowing.
No question.
Monthly. So,
absolutely. No question that you've got a bearish wedge pattern. No question.
Exactly. And the volume seems to be diminishing. It's like a 2.5-year wedge, bearish rising,
Yes.
wedge.
Yes.
But then again, I mean, it's close to breaking out. I mean, we're right there. It could go over a little bit, but if the bottom line, if it were to, like, right there is about 14.45 where the gap up was on January 2nd. So if it gets down to the lower line, you're right there at the gap. And if it were to bust through that on high volume, then it would complete that bearish rising wedge.
Yeah,
I don't know where the target is, but it may be nothing.
No. Look, there's no question that when you take a look at the longer-term chart or even a shorter-term chart, it's just sometimes it's easier, like you're saying, to go ahead and use the longer-term picture here. There is no question that you've got a wedge pattern, and folks, this ascending wedge that you've got, that typically it's a bearish reversal signal. It typically resolves itself to the downside. And, and that's where price is traveling. And it can travel, Tim, it can travel just a little bit above that. So you've got the bearish wedge pattern that is out there. What you've also got, as we take a look at the screen here, you've got two A to B equals CD patterns. The first one just takes you back into the 2009 lows, back at that back into that devil, 660, 679 low out there. And so you've got an A to B equals CD, a 1-to-1, which only had a 0.382 retracement that would complete at 1563.10. That's the price projection. If you come off of the lows from July 31st out here, on July 31st, I should say, of 2010. That also sets up another A to B equals CD pattern. That was a 0.786 retracement, by the way. That moved down into the October lows that Tim was referring to. That 1-to-1 A to B equals CD completes at 1531. So far, the high this month is 1524. And all of that is completing in an area where you've got this horizontal resistance. And the horizontal resistance that takes you all the way back into 2000. And that is an area of resistance. You had a dark cloud cover on a monthly basis. That took place in June of 2007. You had some follow-through to truly make that a bearish engulfing combined candle out there. And then what you had was in the month of October of 2007, went up and tested that level one more time. That happened to also be the high of July of 2007. Now it got over it, but it closed back below it. But you can see how that actually acted as resistance. So you have a triple top that's forming with that ascending wedge that Tim had us draw out here, along with the 2A to B equals CD pattern. So you've really got it all, and it does make you seem it does suggest that the market would want to go and complete that pattern before any kind of significant pullback. And that wedge on the monthly basis, the reality is it could continue drifting sideways like that to slightly up for some time to come.
Yeah,
or even
true.
a pullback.
It may not. Yeah, it may not be something drastic. It may just be.
Yeah, I think that even if the market does pull back from here with these other patterns out here, that it's going to want to go ahead and test that area anyways before it would give us any kind of other signal out there. So even on that wedge pattern, pulling back somewhat and still going back up there to test that, I think that is probably the likely case. As you said, kind of creates that little cone shape there at the end of it. So, it's a great read on you, and thanks for pointing that out to everybody, all of our listeners out there.
Yeah, I appreciate it. You guys do a great job. I've only been listening about 4 months, but I'm getting ready to do some free trials, and I'll be in on your call next, Wednesday?
Next Wednesday, you're gonna like that. You're gonna be like, oh my God.
Yeah, you guys are just right on the money. It's hard to find. I've been I guess I know a little bit about a lot of things, but you guys are doing a great job.
Well, look, thank you, and we love getting feedback like that to each of us around here. We feel so grateful each morning where we get the opportunity to come out here and share with you folks. So it's great to have listeners like yourself, and thanks so much, Tim, and just keep spreading the word.
All right, sounds good. Thanks.
All righty, thanks for calling. You have yourself a great day. Let's go take a peek in on the euro right now. Let's go see what the euro is doing. That's obviously what set off the firestorm this morning. The euro here still wants to make its move down to its rising price channel. More likely wants to complete at least a 1-to-1 A to B equals CD, which will take it down to 131.607. Well, let's go peek in on the intraday chart, 30-minute chart, see what we have here. Oh, the euro just moving sideways, working off that oversold condition, really preparing for its next move down here. Those yellow boxes, just simply the beautiful natural harmonics of the move in the euro. You can see here, this is the third time is the charm out here. And what I'm talking about is you've got the euro move down into the oversold territories, or even if it hasn't, the small bounces that it's had basically are the small harmonics of these yellow boxes here. You know, sometimes just a tad higher. If you do take a look, though, at the last candle that came in here, during the 10:30 session, you can see the bulls trying to take charge of that candle just simply because of the wick there, so that it pushed down, and it looks to me like the euro wants lower price. To what extent we'll see as a retracement here looks to me more like just simply the harmonic here, and looks more like the first time down, which would take us back into the February 13th time frame here. You can see after that first move down how the euro just simply continued to move sideways really for quite a period of time, for about 10, 11 hours out there. And we could see a similar event take place in the euro right now as it works off the oversold condition and gets ready for its next move down, because it does want lower price out there. Let's go peek in on some of the ETFs out here. Let's go see what's happening in the ETF structure. We'll peek in on the Dow first. The Dow just turning positive here. So if we do take a look at the Dow, the area that it is trying to tackle again is that February 1st swing point high of 139.89. It's trading at 139.89 right now. Volume inside the diamonds for the first hour and 12 minutes of trading, 1.1 million shares out here. We'll go peek in on the intraday chart. 3.3 million shares yesterday. That was a test of the swing point from February 1st, and that was a test of a swing point with lighter volume and closed back below it. So that was a failure on price and volume. You did have another test of that level on February the 8th on lighter volume. Of course, on the 12th, it moved with lighter volume and closed up over it, but gave it back yesterday. So we'll see what today brings. But let's go peek in on the 10-minute chart. The diamonds having very dismal volume out there. So no conviction behind the move to either side, whether it be to the upside or to the downside. Of course, as you're testing a resistance area, a swing point area, what you want to actually see is you want to see a test of that area on lighter volume. So that gives maybe a little bit of tendency, a little bit of a better mix to the bears out there. But if we take a look at volume here during this 10-minute phase, 10-minute chart, I should say, during the morning session, I'm just going to refresh my screen, make sure that we've got accurate data out here. So while that's refreshing, there we go. Gapping down here, volume this morning, moving down with 362,000 shares. So that's to the downside. And then in the next trading session, 371, 428, as it tried to make its move higher, and then most recently 115,000 shares. So we can see that the diamonds here losing energy as they move up. We're in this session here. It's got 6 more minutes to go. Volume may be picking up just a tad, 154,000 shares in the first 5 minutes of that trading session out there. Let's go see what this could be running into. A little bit of resistance perhaps right here at the 1550, so that would be 350 in the afternoon session. The high there is 140.09, the low 139.93, and you're trading at 139.89 out there. But not, as you can see, not tremendous volume inside the diamonds to either side of the trade. Let's go peek back in on the ETF structures out here. Let's go take a look at the next one up, the IWM. As we take a look at the IWM, looks like trying to make another new high today. In fact, I think that it has the high so far, 91.62, taking out the high of yesterday, 91.55. 22 million shares yesterday. So far this morning, 7 million shares, so not too bad from a volume standpoint. Let's go look at the SPYs, see what the SPYs are doing here. You've got the SPYs trading at 152.23. The SPYs still trading with inside that 1.272 butterfly sell pattern. However, no reversal signal yet. The reversal signal today, if it were to occur, what you would need to see out here, well, you need to see a lower close for sure. If you see a lower close today, then what you would have would be a bear separating line candle out here. But so far today, right now, the bulls are in charge. They're in charge of the market. It all goes back to, and we didn't do this here. If you didn't catch the 9 o'clock show, I'll go back to the ES Mini. Even if you don't trade the futures and you're just simply trading intraday, you're trading the ETFs, maybe the doubles, triples, or what have you, you still need to make sure that you've got access to the futures charts out there, because they're going to give you the answers as to what's going on and why. So as the market was moving down this morning, it was completing a 1-to-1 A to B equals CD pattern. As it was doing that, it was coming into a previous area of what used to be a previous area of resistance. Once the ES Mini broke through that, and it broke through that with some conviction at 10 o'clock on the trading session of February the 8th out there, that old resistance became new support. And you can see as the ES Mini was traveling down at 6:30 this morning, it had formed a hammer candle at an area of resistance, at an area of support, at an area where it's completed a 1-to-1 A to B equals CD pattern. Helps you to identify where the bulls are hanging out. Just like on the other side, it would help you to identify where the bears are hanging out. Right now, the bears seem to be hanging out at the 1522 level out there. That's where they formed that little bearish engulf, and they said, okay, enough is enough. That was at 11 o'clock yesterday morning. Maybe at 11 o'clock in 13 minutes from now, maybe the bears will come out of the woodwork. That'll be during the Basil Chapman show out there, the Chapman Wave. And Thursday, I'm not sure if Larry is back today. I hope that he is. But the Larry Pesavento show, Trade What You See. Thursdays, that's the commodity hour. My apologies, or the futures hour out there. And the rest of the lineup, as you know, we've got after Larry's show would be Daryl Martin from 1 to 2, David White 2 to 3, Ken Shreve 3 to 4, and the Tom O'Brien show from 4 to 6. And Tim mentioned, folks, the workshop that I am doing next Wednesday, and I'd love for you to be able to get in on the action, and really kind of in the spirit of Thomas Edison. I'm going to be shining a light on a tool created 20-plus years ago, but showing folks a better way to use it. I have identified a pattern that works. It is amazing. The results are just simply amazing. I'm going to go ahead and give you the exact strategies that you need in order to be able to trade this. I'm going to convert what might seem like ordinary into extraordinary for you. I want you to, in the easy way, it's a very easy way to access the class. You just sign up for my Mastering Probability newsletter, which, folks, if you have not done it, it comes with a 30-day trial period. So you've got everything to lose by not taking advantage of this. I don't know that I'm going to be showing this pattern. Again, I'm certainly keep this for subscribers, and it's a pattern that you absolutely want to understand and use. Go sign up for the newsletter. They'll have access to me for 30 days if you want to send me charts, have me look at something. I want to be able to teach you how to use this tool. It's very simple. On the homepage of TFNN.com, either under newsletters, go to Trading Newsletters. You'll see Mastering Probability. Down below, in the middle of the homepage, you'll see the Trader's Edge show where I kick things off here at TFNN. Click on that. That'll take you to a page where you can just simply sign up for the newsletter service. And that's going to be next Wednesday, 6:30 to 7:30. No fret if you can't be there. It'll be archived on your members page for 30 days out there. And so do yourself a favor, because no one's education is ever complete. That includes me. That includes all of us around here at TFNN. We love learning. We love hearing from you. So give that a shot out there. 877-927-6648. Right now the Dow is up 5. S&P is up $1 out there. DAX is off 56. The FTSE down 16. We've got gold down $3 now, trading out at $16.41. Gold taking on its support area. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you could be granted one wish when it comes to trading and investing, what would it be? Would you like to learn how to make consistent profits on a continuous basis? I'm Steve Rhodes with TFNN, and recently I discovered a trading pattern more powerful than anything I've ever experienced before. This pattern works on all instruments in all time frames, and on February 20th from 6:30 to 7:30 p.m., I'll teach you how to master this pattern and show you how if you began trading with $100,000 on September 14th, 2012, you could have created $35,000 in profits in 4 short months. This trading pattern will transform your life, and the live online webinar is available to subscribers of my Mastering Probability newsletter. And now is the perfect time to sign up. Plus, if you're not completely satisfied for any reason whatsoever, it comes with a 30-day money-back guarantee with absolutely nothing at risk. This is a decision you won't regret. 60 minutes that will change the way you trade forever. Sign up for Mastering Probability today at tfnn.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Flat market out here. You've got the Dow up about 4 points. Composite down 1. Small caps up 80 cents. Let's peek in on, whoops, so we were going to try to do that. We're going to peek in on Whole Foods markets. They are struggling here this morning. Looks like I erased that chart, so let's go ahead and pull that back up. Ticker symbol WFM. That is trading down about $8.60, off about 8% this morning. A number of stocks getting taken to the woodshed, Weight Watchers being one of those. But as we take a look at Whole Foods markets out here, I was going to get rid of a couple of things out here. Oh, let me just do this. Give me a moment. So as we take a look at Whole Foods market, it is coming back into a swing point here, the most recent swing point that has volume of 3.1 million shares. The low there is 86.85. It has gotten down. It hasn't tagged that level, but it's coming in there with big volume, 5.7 million shares already. It's only an hour and 25 minutes into that trading session. What Whole Foods is doing is also trading inside this high volume gap down from July 20th. That is really where Whole Foods is headed to, is all the way back down into the swing point here on July 23rd. That low is $81.55. So it's coming in with volume into its most recent swing point. It'll break that area, should break that area, and then travel down to the next swing point, which is really not much of a well, I take that back. It's going to be, it's an untested gap out here, which goes back into the July 25th high, and that level is 84.78. So I suspect that is where Whole Foods is traveling to. It's at $88.33 out here. This has had some pretty nice volume here up at the highs back on September 21st out there. Did volume of 4.7 million shares. So, once it started breaking below that, that was not a good thing. That should have been a strong area of support. And that price point, now you didn't have wide price spread that day. You did have a lot of volume. And that was a price spread of $98.93 up to $100.27. And once the market breaks below that area, starts to get suspect. And then you had some institutional selling that came in on November the 8th out there, a little bit of follow through on the both on the 8th and the 9th out there. So you got Whole Foods markets here. The stock chart doesn't look completely damaged, but today's volume is not a good thing for sure. By the end of the trading session, with it already having 5.7 million shares and its highest volume day out here, goes back into the February 10, 2012 level. That's at 82.19. That's what held it in place the last time when it moved down. That is only volume of 8.4 million shares. So it is, and that high there was 82.36. That is really what stopped Whole Foods in its tracks back in July of 2012. Let's go see, what do we have here? The biggest mover to the upside. We haven't looked at it. STZ is the ticker symbol. That is the beer conglomerate, STZ Constellation Beverage. So let's go take a look at this and see what kind of, look, this thing is gapping up with some huge volume. After having a big, huge downdraft here on January 31st, that had a volume of 38 million shares to the downside. Today, is that right? 38 million shares to the downside. Today, it has done 31 million shares in only an hour and 27 minutes of trading. Pretty amazing volume going on there. That is taking out its highs, I would presume. Let's come back and take a look at the monthly chart. Yeah, most certainly is. So this is breaking out to new ground out there with some pretty decent volume. Folks, stay tuned. Basil Chapman will be up next, and make sure you have a great Valentine's Day out there. And remember this, folks, you have an amazing power within yourself, and that power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of our TFNN family. Have a great day, safe day, and look forward to seeing you in the morning. Take care, folks.